But Sunil Subramaniam as well joins in on the show right now to talk about where he's seeing value in the market. Sunil, hi, good afternoon, and wish you and your team a very happy Diwali from all of us. Just wanted to understand, how is it that you're maneuvering the market right now? Anything that you've bought in the current decline?
First of all, happy Diwali to all of you and the viewers. Well, in the recent decline, I've been in the positive and bullish on the banking space. I think that the recent corrections are all not justifying of the future. And I think that it's because FIIs are selling and they form a large part of the large cap index. And naturally, profit booking represents an opportunity there. But that's where, because the FIIs are doing it that way, I think that's where I think I'd be bullish. So to me, banking and financial services is a key segment for the next year.
For some of these key segments for the coming year as well, but overall there are these individual movers which are moving on decent amount of volumes. Kunal, for instance, MCX, that one is trending lower. No specific news flow that I can track on that one. Of course, a lot of chatter around it. And on the upside, you do have a name like Capri Global, which continues to gain ground.
So MCX is something which I believe on the short-term charts is still looking attractive. The stock is trading much above its longer-term averages, 50 DMA. The stock is making a pattern of higher highs and higher lows. So there's nothing major in terms of the chart patterns which could probably indicate that maybe the trend has reversed for the stock. So we'll look out for supports in the range of 6,000 to 6,150 for MCX over the near term. Until the time the stock closes above those levels, we can expect that this trend may continue. Capri Global is something which I don't track, so I'll skip that.
Okay, skip and Capri Global. Kunal doesn't track it. But L&T, let's just mark that stock as well for you. Holding higher by about 1% as we speak right now. BEL has seen quite a fair bit of momentum. I think a good 4% of an uptick is what it closed the day with yesterday. Right now also holding up about a good 2% as we speak right now. Sunil, has the time come to now selectively looking back at PSUs? And I'm going to keep the banks outside of this list.
Okay, keep the banks because PSU banks are among my top picks right now in the PSU space. But if you want to take out the banks, I think, see, one thing to remember about the PSUs is a lot of them are linked to global cycles. Like the energy is linked to global cyclical, metals are linked to global. So I think what happens with the election, Trump and with China and what leads to the metals pack would reflect on the PSUs. So I would say that to expect a revival in the PSU segment, I would look at metals and energy. They are the big part of the PSU index and what happens outside India rather than what's happening inside India. Inside India, within the PSU space, is the power sector I remain bullish on.
That you're still bullish on, but we have been speaking with a lot of managements today. So let's try and run you through the sound bites of some of them. Redington, for instance, is doing well in the trading session, and there are a couple more which are in focus. Let me toss it across and hear out what the management had to tell us earlier. Okay, some of these corporate lenders should be doing well in the trading session, but yes, just getting set for the festive season, though the market continues to be a bit subdued. Maybe the market participants have already gone home, but apart from of course that Coldplay frenzy that we saw, Aisha, now it's expected to be a Maroon 5 frenzy because they are coming to India.
But the thing is, will we get tickets for any?
That's the big question, and perhaps the pre-sales and the ticket sales start on November 6th. The event is in December sometime. So now people are watching out for that one. So let's see whether that consumption boost really does play out or not. Sunil, what's your take on this consumption overdrive that we are seeing? Of course, the upper end doing quite well, but rural, mid, mass segment still a bit weak.
Yeah, I think it's a matter of confidence. And if you also look at it, the price in the SIP book is coming from the disposable income of the salaried class. So I think there's a significant shift in not just away from bank deposits. I think there's a shift from consumption into savings. So I think that's the thought process. Our per capita income has gone up from 2,300 to 2,700 levels. So that increased income, whereas the rich are getting richer, means that the K-shaped recovery and the premium segment continues. So there are automobiles today with almost 90 weeks of waiting period. So the premium segment continues to do well. So it looks like the K-shaped recovery is stretching more. But I think this festive season, I know the initial numbers are not indicating great, but let's just wait for the Diwali and the Christmas to get completed. I would like to see that the monsoon was good, so rural pickup should have been there better. But I think it's just a matter of delay. I remain positive on the consumption space because ultimately, right, the aspirations will come down below to the closer to the bottom of the pyramid. Recent corrections in that, because the festive season hasn't turned out as expected, means that I would look at still as a buying opportunity. I think in the next year, consumption will flatten out from a K-shaped to a U-shaped recovery over the period of the year, starting with next summer's thing. So I think that it's a good time to keep your consumption holdings and add to it on dips.
Naresh, though, are the charts indicating that, there have been a few odd inline to positive surprises from within the FMCG pack, though, although at large, most experts seem to be believing that it's a clear avoid right now as a sector. But what are the charts reading for a Dabur, Marico, Unilever, ITC?
So we saw a huge run in FMCG post-elections, which is where it became a defensive play, as well as there was good guidance from a few companies, but it has all faltered. So in this case, there are, say, selective chances which would come if we see another 5-8% correction, purely because the prices have corrected a lot. So for example, Dabur used to be 500, 530 before this rally went to 670 and is now coming back to that band. So closer to 500, 530, that's a buy. Hindustan Unilever, the stock went all the way to 3,000 odd levels, has corrected to 2,500. The base for the last 2 years is around 2,300, 2,400. So any correction of 5 to 8%, it again becomes a defensive buy and expect a slow and steady bounce over the next 6 to 12 months.
Right, okay, that's the take coming in FMCG, just marking some of the buzzers in today's trading session. Adani Enterprise is holding up a good 5% right now. Tata Consumer, Maruti also continues to hold out, and Hero MotoCorp is looking quite, smartly positioned indeed. Sunil, what's the analysis and the verdict now for the auto pack?
Well, I think the auto pack, I still remain a bull on the auto pack. Like I said, because this K-shaped to U-shaped auto with the two-wheeler segment, entry-level cars, I do expect next year to be good for them. I know that the auto index return has been much better than the large cap index return, which means it's run a bit of a rally. But I would remain bullish on that segment because now it will be more widespread and broad. And I would expect that not only will this Diwali show some pick, there's been lots of stock at the stocking points. And I think post Diwali, you'll see that it's been picked up. Again, March becomes again as a buying point because of the indexation and the taxation benefits, So I think that I remain a bull on the auto space. But remember that auto is not just one space, right? You have to split it up into the premium car segment and to the smaller end, which is two-wheelers. You have to look at the auto component segment, which is an export-oriented, and there the IMF saying the world is on a recovery mode augurs well for that. Then you have the agri-related tractor segment, which again with good monsoon and a good rabi crop should see some pickup. Then you have the commercial vehicles and CV cycle, and with the capex cycle picking up, I think the CV segment should do well. So if you disaggregate auto, I find there are a lot of spots there where you can buy. There are different time points, different price points to buy, but overall, I remain a buyer, bullish on the auto space. Some of them may have run up. You could, take some profits, but by and large, I would look at the auto pack as a consistent hold in your portfolio.
But since we're speaking about consumption, let's put the spotlight on Maruti Suzuki as well and hear out what the chairman, Ms. R.C. Bhargava, had to tell us.